So there are 7 statements, okay, that you have to answer from. Okay. So Ajay sir is saying D, first, second, fourth, fifth, and sixth. Okay, what about rest? Dhananjay sir is saying B or D, either B or D. Okay. Shraddha ma'am is saying B. Okay, chalo, let's find out the right answer. So when you talk about capital formation, what is the meaning of capital formation? Capital formation simply when you raise capital for any purpose, for the need of the investment. You want to start a business, or let's say you want to build your own house, or whatever the reason for which you raise the capital, that is known as your capital formation. Okay. So here the first statement is asking for the growth of any economy, capital formation is essential. Is it true? Obviously, it is true. It is very important. If you want to have a economy growth, then you need a capital, because what happens when the people have money, they have capital, they will demand goods and services, and when they demand goods and services, it's very obvious there will be a production increases the GDP, and GDP increase the economic growth. And if you want to have economic growth, it is very much important you have a capital formation. So first is correct. Second is saying capital is the source of funds with which an entrepreneur is able to take the risk of setting up and operating a business enterprise. Is it true? This is also true. If I want to start a business, entrepreneur means the person who starts the business, the person who is ready to take a risk. So the capital is the source of fund which helps the entrepreneur to start the business. This is also true. The capital is available with person with wealth who have savings like entrepreneurs. Is it true? Obviously not. It's not true. Reason? Because the entrepreneur are the person who are the deficit of funds people. They are not the person with the surplus fund. Savers, or we can say the persons who have wealth, like individuals like us, we should be there. So third is wrong. Next we are talking about these persons with wealth, howsoever little it may, needs to be able to make the wealth available with the entrepreneurs who can invest the savings made available to them. Is it true? Yes, obviously it's true. Doesn't matter you have 500 rupees, 1000 rupees, or let's say lakhs or crores or rupee. Whatever money you have, that is your savings, and you let this wealth available for the persons who wants the money. Okay. Now, example of wealth possessors are individual, firms, corporate, government. This is true. Okay. Next we have these entities are also those who require finance for producing goods and services in the role of entrepreneur business. This is also true. Okay. Next is saying wealth must therefore flow from pockets of deficit to pocket of surplus. No, it should be opposite, from pocket of surplus to deficit. It means the third and seventh statement is wrong. All the other are correct. First, second, fourth, fifth, sixth will be your right answer. And first, second, fourth, fifth, sixth is in the B option we can see here. So right answer will be your B. Correct. So why the second statement is wrong? Sorry, third statement is wrong because it should not be entrepreneur, it should be individual, firms, government, etc. Why the seventh is wrong? It should be flow from pocket of surplus to the pocket of deficit. Okay. So your right answer will be B option. Very good. Acha, do make sure you count how many answers you are given correct. Okay, do make sure you are counting how many answers you are given correct. Now, which among the following statement is are not correct in relation to the concept of Nariman Committee 2? The statement not correct in relation to the Nariman Committee 2. Let me know. Not correct about Nariman Committee 2. So, Nariman Committee 1 and 2 are very important for us. Okay. Let me know the answer. Okay. So, option number B, C, and A. Three options are coming. A, C, B, or C. Okay, so let's see. If we talk about Nariman Committee recommendations are very important. There were two times this committee have been created for the financial sector reform. Financial sector reform mainly was for the banking sector. Okay, so first we are talking about it was formed in the year 1991. Actually, this first one is not correct because it was not formed in 1991, it was formed in 1998. In 1991-92, there was a committee 1, not a committee 2. So the first one is not correct. Okay, now, second. The government appointed yet another committee under the chairmanship of Mr. Narasimhan. This is true because earlier also government have created a committee. Better known as the Committee on Banking, it was mandated to review the progress in the banking reforms and to recommend a path for further strengthening the financial system in India. This is true. Third is true, second is true. Now, fourth is saying the committee focused on various areas such as capital adequacy, banks merger, banks legislation, etc. It has submitted its report to the government in 1998 because it's a committee too. It means all the other statements are correct. Only first statement is not correct. So the right answer will be your B, only one. Only one will be the right answer for this question. Okay. Why? Because it was introduced in 1998, not in 1991. So right answer is B. Those who have said B, it is correct. Now, next question, a very small question that is talking about which among the following is a non-intermediary financial institution. Which of the following is a non-intermediary financial institution? Is it Punjab National Bank? Is it Adda? Is it NABARD? Is it SEBI? And non-intermediate financial institution. A and B, two options are coming. Do read it very carefully. It's a non-intermediate financial institution. If you are saying B, B is not a financial institution. B is a regulatory body that regulates the insurance market. It cannot be B. B is not a financial institution. Similarly, SEBI is not a financial institution. It's a regulatory body in the investment market. And now you have two options. It may be either PNB or NABARD. So PNB is a financial institution and it is a mediator. It becomes mediator, but not the NABARD. NABARD is the National Bank for Agriculture and Rural Development. That's a development financial institution and it do not become the mediator in the transactions. Okay, so the right answer will be your C. Right answer is what? It is C. So do remember, because it is asking about financial institution, you can simply eliminate the two options. Now, next question. Next question is talking about which among the following statement is are not correct in relation to the financial instruments. In relation to financial instrument, which of the following statement is not correct, that you have to answer. So read them and let me know the answer. Also remember why the statements are wrong, because I am giving you the explanation also why this statement is wrong. So do remember that as well. So let me know the answer. Okay. First statement is saying these include instrument on asset as well as on the liability side of the financial institution's balance sheet. And it is true. Okay. It is true. It's actually covers, like in the banks, the assets of a bank is loan and advances. The liability of a bank is public deposit, and they both are the financial instrument, right? Similarly, the shares, debenture, bonds, etc., the both side will be counted. They can also, okay, I got three answers, that is D. Okay. They can also be in form of intangible value added services which can facilitate financial development. This is true. Financial instrument on the asset side of the balance sheet include loans and advances, investment, placement, derivatives. Very true. Whereas financial instrument on liability side of the balance sheet include deposits, money accepted from customer for remittance, insurance policy, mutual funds, unit issued, and contribution received for the building up a corpus. That is also true. While financial institution and financial instrument provide the base for capture and transfer of wealth from the savers to investor, the process cannot be completed without a financial market. This is also true. It means none of these statement is wrong about the financial instrument. All the statements are correct. Okay, so your right answer will be D option. Very good. Now, next question. Under the recommendation of Nariman Committee 2, what is the narrow banking? What is narrow banking all about? Under the Nariman Committee 2, what is narrow banking all about? So we know banking means the services that bank provide to its customer. That is banking. Okay, and we have to answer under the recommendation of Nariman Committee 2, what is narrow banking is all about. Okay, all of the above, everybody is saying D. Read it very carefully. All of the above. The bank's NPA should not exceed 20% of its total asset. That's a narrow banking. Narrow banking is a type of service. When you find out the banking in the word, it means the service that the bank is providing. According to that, the banking type will be decided. And I'm getting answer A and B, two options more. Okay, first is saying transfer of bank's NPA to asset reconstruction company for better management. This is not a narrow banking. The weak bank should place their funds only in short-term and risk-free asset. This is true, not this one. So right answer will be B option. Right answer is what? It is B option. Acha, when it comes to the types of banking, first of all, do remember how many types of banking are there. First, when we talk about narrow banking, when we talk about narrow banking, what is narrow banking? When bank place its fund in risk-free assets. Okay, when bank place its funds in risk-free assets, that is narrow banking. Like the payment banks are doing. Payment banks can only invest in risk-free assets. That's the government security. So payment banks are providing us the narrow banking services. They can only invest in the risk-free assets because they are accepting a limited deposit from the customer. Acha, how much deposit per customer can be accepted by the payment bank? Let me know. So this is your narrow banking. Narrow banking simply means when the bank places its fund in the risk-free assets. Let me know the question I ask. How much deposit can be accepted by a payment bank per customer? Now the second type of banking, we have shadow banking. We have shadow banking. What is shadow banking? Simply banking services provided by NBFC, non-banking financial companies. So NBFCs are not bank. Okay, NBFC is not a bank. NBFC is a non-financial institution, non-banking financial institution. It accepts deposit, that is term deposit only, for minimum 12 months and maximum 60 months. And when it comes to the NBFC, it provides the certain services like a bank, like it accepts term deposit, it provides loans to the public. And that's what the type of banking we are talking about, that's a shadow banking. So they are not bank, but they work like a bank. That's why it is known as a shadow banking. And payment bank accept 2 lakh per customer. Okay, it used to be 1 lakh, but it have been increased by RBI. Now they can accept up to 2 lakh per customer, not more than 2 lakh. Okay, chalo. Now next third type of banking we have, let's say virtual banking. Acha, what is virtual banking? Let me know. What is virtual banking? If you do not know any answer, just immediately write don't know. Online banking. Okay, very good. So virtual banking without visiting a bank branch. Without visiting a bank branch. So when without visiting a bank branch, you can perform or you can carry out the banking services. And without visiting a bank branch, you are carrying out banking services. That is known as virtual banking. That is known as what? It is known as virtual banking. And if you want type, you can say online banking. You can say mobile banking. You can say ATM services, etc. They are the types of virtual banking. I do not have to go to the bank branch. I can deposit money from the cash deposit machine. I can withdraw from the ATM. I can print my passbook from the passbook printing machine. I can deposit check in the kiosk centers. So I do not have to visit the bank branch. That's a virtual banking. Now, next type of banking we have, that is Islamic banking. What is Islamic banking? Let me know what is Islamic banking. What is neobank is a different concept. Neobank is a different concept. They are not regulated by RBI, that we will study. Neobanks are a kind of banks that providing you digital service, but RBI will not be regulating them properly as the commercial banks. What is Islamic banking? This banking works on the Shariat law. This banking works on what? This banking works on the Shariat law. And when it comes to the Shariat law, it says that it prohibits the acceptance and giving of interest. It prohibits acceptance and giving of interest. So Islamic banking works on the particular, we can say it works on the particular law that is known as Sharia law. Okay, and this law says that acceptance and giving of interest is prohibited. You cannot accept interest on loan, you cannot provide interest on deposit. That's Islamic banking. Now, what is door to door banking? What is door to door banking? Simply, when we provide banking services at the doorstep of common man. Okay, so when we make the banking services available to the doorstep of common man, that is known as your simply door to door banking. Now, what is universal banking? What is universal banking? What is universal banking? Universal banking means you are getting all kinds of activities under one roof. Okay, when you went to the bank, you can deposit, withdrawal, lending, deposit, etc. will be done. But apart from that, all the other services, it gives you the consultancy, it gives you the demat account, it gives you the mutual fund, insurance, interest, etc. Everything will be provided. That is known as your universal banking. Okay. Now, next we have para banking. What is para banking? What is para banking? So when bank provide it additional services apart from its day-to-day transaction, like what are the day-to-day transaction of a bank? Accepting deposit, providing loan, and performing withdrawals. These are the basic of day-to-day transaction of a bank. But apart from these three activities, if bank providing the other services to the customer, that is known as your para banking. Okay, that is known as what your, it is known as your para banking. Now, next. Next, we have a type of banking that is known as your relationship banking. Relationship banking means simply when a banker creates one-to-one relation with customer. With customer. That is known as your relationship banking. So when the bank creates one-to-one relationship with the customer, that is known as relationship banking. Examples of para banking, like say, apart from deposit withdrawal lending, bank is providing me insurance policy. Apart from deposit withdrawal lending, bank is providing me international credit card or debit card. Apart from deposit withdrawal and lending, bank is providing me mutual fund services or a demat account services. So apart from day-to-day transaction, whatever additional one or two services bank is providing, that is para banking. And when bank provide all the additional services under a one roof, that will be known as universal banking. Clear? So these are the certain types of banking you have to remember. Clear? Chalo, now let's move forward and talk about the next question. Read the following statement carefully and choose the correct option with respect to phase 1 pre-independence prior to 1947. So phase 1 development, we are talking about pre-independence prior to 1947. So there are two statements, statement 1 and 2. Read them and let me know which statement here is correct in respect to the phase 1 pre-independence. C and D and B and okay, B, C, D. Okay, let's see. The first is saying during this phase, Bombay Stock Exchange was also established in 1975. It is wrong. Bombay Stock Exchange established in 1875, not in 1975. Okay, 1875 was the year when the Bombay Stock Exchange was established. It means the first one is wrong. I do not have to read more. Now, the pre-independence phase during the 1920s was marked as extremely turbulence in the financial market. This is true, which led to the closing down of number of banks. This is also true. This suffered the establishment of banking regulator. True. The setting up of a central bank named Reserve Bank of India was recommended by Hilton Young Commission in 1945. Is it true? The Hilton Young Commission recommended to establish RBI is in 1926 recommendation, and RBI was established in 1935. Both the statements are wrong. So right answer will be D. Okay, the recommendation by Hilton Young Commission first time given in the year 1926. RBI was established in 1935. So both the statements are wrong because the years here given is a wrong. So right answer will be your D option. Okay. Now next question. The Depositories Act came into effect in the year. Acha, also let me know what actually the depositories are, what they do, what actually the depositories are and what they do. Okay. See, first of all, Depositories Act was introduced in the year when NSDL was introduced. Electronic form. Okay, very good. So actually the answer is 1996. Depositories we have is two types, NSDL and CDSL. National Securities Depository Limited and Central Depository Services Limited. So NSDL was established by NSC and CDSL was established by BSC. Now what they are doing, simply they convert the physical security into the electronic form. Okay, and deposit it into the investor's demat account. That's what the work of the NSDL and CDSL. And the Depositories Act came into existence in the year 1996. So right answer is A. Next, which among the following is not a part of sweeping reforms? Which of the following is not a part of your sweeping reforms? Delicensing of imports, tightening of foreign exchange regulation, abolishment of license raj, pegging of exchange rate. So let me know which of the following is not a part. A, B, C or D. Okay, so right answer is actually your D. Very good. Second and your fourth is not a part of your sweeping reforms. If we talk about the